Hello, everyone. Welcome to TaxSmart Cafe Casey, and we are back on another podcast, and this is our second one, number two. And before we begin, just a quick disclaimer: all strategies and information provided in this podcast are general advice only. It does not take into consideration any of your personal circumstances. Please speak with your accountant prior to acting on this information to ensure that you are making informed decisions. Thank you.
And we're again TaxSmart Casey. I'm Jen.
I'm Odwin.
Hi, I'm Dave.
I'm Ace.
And I'm Roselle.
And tonight we're going to discuss about.
Yeah, so we're going to discuss about why we need an accountant in our team, because we did mention during our last episode, one of the questions there was, who are the people that you should have in the teams, and one of them we mentioned was you need an accountant.
And today we are here with a professional accountant, joined by a Casey team. And why don't you introduce yourself?
Oh, hi guys. My name is Dave from TaxSmart Casey. I'm handling tax accounting as well as preparation of your income tax return. So I'm your neighborhood accountant, your friendly neighborhood accountant. So thank you for tuning in.
Don't forget to hit that like and subscribe.
It's there on Spotify. Oh, we have it on YouTube anyway.
Yeah.
So
Yeah.
okay. So we have some phone-in questions.
Oh, good.
So I have it. So first question, Dave.
Yes.
So as a property investor, what should we present to you during tax time?
For most property investors, you actually have property management team that you have there, so they can actually prepare everything for you and they will submit that one during tax preparation. But for the purpose of tax planning, you don't only need to have an accountant during the tax preparation. Actually, you need an accountant throughout the year for the purpose of tax planning purposes, from the start of the year, whether you buy your asset to the time you dispose your asset or you use it for rental property investment. Everything has tax implications that you need to have a planning for that one. So for the purpose of discussing what are the things that you need to have during your income tax return, actually that's the very big questions for most of us property investors. You actually need to have thorough knowledge on what are those expenses like council charges, all the incomes that you get from your investments, and also from the biggest expenses that you incur, such as repairs and maintenance expense, which is one of the biggest actually for most investors, for most property investors. And also here comes the interest for the loans if you bought it with the loan, right? So all those things are actually the one that you need to prepare during your tax preparations. So better to have a very big picture on that one if you consult with your, say, maybe your own personal accountant, so you have a better understanding of what else that you need. So not just the general informations, but also the details on what else that you need.
Yeah. So actually, our experience during during this tax season was that we were actually more prepared during our tax time, because we did engage with our accountant earlier this year and really ask what are the things that we can actually ask for deductions, such as borrowing costs, because when in the middle of the year we did change from one bank to another, and there are some costs there that we can actually claim, but because we were able to ask that from our accountant, so we were able to maximize those claims.
Yeah.
Yeah.
I think I like what you mentioned, that you have to all year around accountant, not just during the tax return. So it's good that you mentioned that, because as property investors, we got used to, we only prepare at the end of financial year. So with that note, what do you think we can suggest, like, for people like who have property investor, how to keep up with their tax returns, just best practice, like keeping copies of expense.
Yeah, sure. Actually, so for those property investors out there, you need to have a personal accountant that you really knew or something that you trust with. That's the first thing that you would want to have. Second one is have just a copy of everything that you spent, even if you don't know that it could be a tax deductible or not. So your accountant can actually take a look of those expenses. Take a look at those expenses if you could actually claim that one later on the end of financial year. So the best thing to start with or the best thing to engage with your accountant is not at the end of financial year, of course. It's the start of financial year because everything that you spend, everything that you bought related to your property investment, you can ask your accountant easily.
Nice.
You can just tell them that, hey, is this a claimable expense? Do I need to keep this one now? So if you have your own accountant, it's easy for you to ask them actually.
So we can actually contact you any time of the year.
Yeah, of
not just
course.
during
Flash the
tax
number on the screen.
Okay.
And don't forget, we can book a consultation with you as well if you have any
Yeah.
questions.
Yeah. Oh, that's good to
That's
know.
good because when we do this, we just put everything in an envelope, but we forget about it.
Yeah, that's the problem with,
So
especially with people that would want to cram everything.
don't want to
They-
pram. Yeah.
They want to have everything at the end, and they want everything to be put at one time.
Yes.
Yeah.
And the good thing with you, Dave, is you actually give an Excel spreadsheet to your clients who have property, so they're aware
What
of
can
what
claim.
they can claim. So
Yes.
it's easier on their part and easier on your part on tax time, so that you make sure that nothing is missed.
What's the best thing for an accountant to do is to educate their clients. That's the best thing that we can offer. We don't just offer the services that we have during the end of financial year. So the best thing that we offer is not just about preparing their tax return, but the education in itself, that our clients will be educated later on at the end of financial year, that they know, they are pretty confident that, oh, I know what I'm doing. Yes, so that's actually the thing about having an accountant.
From TaxSmart Cafe.
Of course.
Now, I heard that before buying a property, it's good to engage with your accountant.
Yes.
So apparently, there's a question about proper structuring. Is that something that we should be asking our accountants?
Yeah, of course. You can definitely ask your accountant whether you need to put it on a trust fund or you need to put it in a business. So there are pros and cons on doing that one. So then definitely you can just ask your accountant what's the best thing that would fit you as an property investors. So we can actually discuss that one by one. But when you do have book your accountant, you can actually ask them what's the best thing for me to have. Do I need to put in a property on my own, or just have it on a family trust maybe, or maybe I'll just name it on a business. So there are pros and cons for those business those structures that you want to.
Yeah.
Yeah, and I think for us, we were already discussing about trust, because now that we're having a little one soon,
Yes.
so if we're going to buy a property, we want to make sure that there's no CGT when we transfer the property from one generation to
So
another.
CGT means capital gains tax.
tax. So so that's one reason why we have to speak with our accountants as well.
Right. Yeah.
Yeah.
Good.
So another point is how do we maximize our tax efficiency as a property investor. So that's one of the key questions.
It's
Do you have any-
actually not just a property investor, though. Property investors has a lot of things to claim, but it's actually true to all. You can actually maximize your tax return. Number one, if you have your own list of expenses, that's a number one. So you have to make a list of all the expenses that you get, especially with the documentation and everything and that one. The second one is, of course, talk to your accountant, because not everything that you document and you list is claimable. So the best thing to do is really to have your accountant take a look of all the expenses that you've got. So that's the way to save your taxes, or to maximize your expenses and save your taxes legally. So that's the best thing that you can do. Number one is list all your expenses. Number two is ask your accountant if that's claimable expenses relating to maybe your business or your employment, or what our topic is related to your property investments.
Right.
And is it important to keep receipts? And
Yes,
if so,
of
how long for?
course. Oh yeah, usually on here in Australia, for the purpose of documentations, an ATO can actually take a look at your receipt for at least 5 years.
That's good.
So
What
you
if
really
my dog ate it?
Oh, that's a problem. So
I
that's
think
why-
that's good that we're keeping receipts. I said, but she doesn't like the idea.
I don't like it too.
really
Just
has
throw
to
it
do
away.
We really have like 5 years worth of receipts,
Oh my
or more than
God.
more.
It's-
Full in folder.
The problem with
it's
the old
actually
receipt.
different with you guys, because most of my clients, it's the girls that would want to keep all the receipts.
I don't want
They are pretty organized.
But
But I think now I'm appreciating it more because
Yeah.
now that I've been hearing a lot of friends who are planning to sell their house, for example, after keeping it for 10 years, is they have to keep the receipt for that duration because it's something that they can claim during with the capital gains tax.
Yes.
So
That would actually part of the cost. You can actually use that one as part of the cost. Not everything though, but at least you have the receipt to support if that would be part of the cost later on.
But just a handy tip, I've been hiding, I mean, not stashing my receipts. But after a while, it depends on the temperature too. It can fade
Ah.
after,
Fade,
because
yeah.
it's
Definitely.
temperature based. So it's better to,
have the
Yes.
digital.
That's
Digital.
why,
You have
correct.
the digital. It's easier. Number one, it's easier to store with. That's the number one thing. Second one is you can easily pull that one out if you need it.
And I think if you're a property owner, it's really helpful to have rental managers.
Yeah.
'Cause they
Property
keep-
management.
You also keep the receipt.
Yeah, because they have the receipts, so that's easier. And you only pay like what, $20 a week?
Wow.
So yeah,
It's worth it.
it's worth it. And again, that's tax deductions.
A lot of the people that I've been meeting during this tax season, the first thing that they would ask how much is my return? And
The
if
magic
how
question.
much is my return? If the return is
Yes.
smaller, then they feel that the accountant is actually not good.
Yeah, actually.
Especially if we have, if we have investment property, or if we have investments or other businesses. I think, what do you think about that? Can you comment on that? Is it bad? Is it bad that we're not getting any returns, or is
Yeah.
it actually good that we're actually paying?
I actually have a lot of clients that has that mindset that they would want to have a refund at the end of financial year. So that's actually one of the people thinking that at the end of financial year I should have a refund. But that's not the thing with property investment or any investment that you would have. You don't want to have an investment that is losing. Say for example, you're a property investor, so you already are property investors for just a few years or maybe 10 years, and you're still on a loss during those times. Then you might as well consider to cut those investments. It's not an investment; it's actually a loss. So an investment that's not earning a profit now, it's not actually a good thing. So if you are paying your taxes on top of the refund, maybe at the end of financial year you are on a payable, that means that you are earning. That means it's actually good. For the first few years, then you can say that it's actually good that I have a refund, because everything that you actually bought, everything that you the cost of everything that you invested with comes on you on a way of a refund. It's a way of the government saying that, hey, you are taking care of yourself, so I will give you something. That's actually a good thing that you have a refund at the end of financial year when you are, say, like 2 years, 3 years property investors, because that's actually the beauty of negative gearing, right?
Yeah.
But negative gearing throughout 10 years, oh, that's crazy. It's actually not a good idea, because the main thing about investment is you have to earn.
Yeah. So would you consider resetting, like sell the property if it's not, doing negative gear anymore?
it's not doing negative gearing. So any property that you would invest with is for the first few years it will be really a negative gearing because it's actually like setting up a business.
Yeah.
The first few years that you set up investment, you put a capital outlay there. So it's something like that when you are doing your investment, right? So when you do your property investment, you first take a loan and set up everything, and it would cost you not just a small amount of money; it's a hefty amount of money.
Yeah.
So the good thing with the government here, they consider that one as a negative gearing for your income taxation. So they give back portion of that expenses to you as way of a refund. But later on, in maybe 4 years, 5 years, it will eventually be a positive geared investment, and you will actually earning more on that one. So maybe if you have a negative gearing for 10 years, you might as well consider selling those properties. It's not helping you. It's actually giving you more expenses that you would actually need to.
It's more of a liability.
Yeah,
than
it's
an
actually a
asset.
liability.
Or if it's in a good area, you would have expected it to have doubled by that time.
Yes.
In 10
So
years.
you would have built up
It's
some
actually
equity.
depend on what kind of investor are you. Are you the type of investors that would want to have a property investment, or you just want it to have just a capital appreciation? So you say capital appreciation, you just buy those land and sell
So
it for a
you're
quick
just
profit.
spliffing it for a
Yes.
quick profit.
Definitely.
Yeah.
But definitely, we would want an investment that actually produces wealth, because that would also set us up for another opportunity to buy either a property or invest in businesses. So that's actually good point there,
Yes.
Dave,
Yeah.
saying that it's not always about the refund. It's good to pay. Sometimes it's a good indicator if we're paying, because that means we're
Yes.
actually
Definitely.
earning. And is that the same way with businesses?
Yeah, it's the same with businesses. The good thing about property investment though is it's a passive income. You don't need to do anything. You just bought the property, have someone to look at it, and have someone manage it, and you're just earning monthly, maybe quarterly or yearly. You earn. Say for example, you just have 10,000 properties there. You're just sleeping in your own house. And you have maybe 1,000 maximum amount, 1,000 per month, and you have like 10 properties. It's a passive income already. You're earning around 10,000 per month.
Yeah.
It's actually that's a good income. With a business though, you have to really work for it. So especially for the start, you have to really take everything in consideration, especially your competitors. You have to really study your structure. I'm not saying that business is bad. Business is actually good. Business is actually a good way of investment as well. But it really depends on you as to what
Risk
type.
appetite.
Yeah, it depends on the people's risk
Yeah.
appetite. So what type of investor are you?
So I have a small business. So do you think I should hire an accountant? What's the advantages of having an accountant for small businesses?
The question, do you think I need an accountant, is actually very tough question though. Having an accountant have advantage over someone that doesn't have an accountant. So first and foremost, for small businesses, if you don't know anything about setting up a business, or maybe doing the legalities or technicalities of having a business, you definitely have to have an accountant or something, or someone that has knowledge on doing those things, the technicalities I mean. It's like flying an airplane without having an actual pilot, right? Would you actually ride an airplane without having a pilot, or just having the flight attendant fly your plane?
That's true.
It's like having that one. Business is like flying a plane. So for you to fly a plane, you need to have an expert on doing those things. And the best point person to do those things are the one that actually does those things, which is the accountants or business persons. So if actually you are really confident on having your own business run by you, you know the technicalities which most of the peoples don't actually knew. And then you are safe to have those things run by your own. But if you are the type of person that you are lost of everything that you are doing, you might as well consider having an accountant, because they are, I'm pretty sure that they are actually doing that one for a couple of years now. Or couple of business owners as well. They do that one. Repetition is actually the best thing to teach you.
Yeah. So I think most of the business owners starts without accountant. So especially
Yeah,
when
definitely.
doing online business or what, because you know
Usually
that's
DIY.
yeah. So I think it's not bad for
Yeah.
the start, as you said, if you know the technicalities. But I think we have to draw a line that we're gonna need the accountant sometime.
Yes.
And where is that? Where is that line? Like when you're gonna need an accountant? If you're earning like 1,000 a month, or how much, or when is it? What do you think?
Oh, when it's all piling up, all the work that you can't, you just need to delegate or just hand over some work because you can't keep up.
Yeah, so all those things are actually pretty true, right? So
Yeah.
if you don't know what you do, or
That's
you
good.
just want to have you just have the skill. Say for
Yeah.
example, you're a chef, or you are an architect, or you are say for example a painter, where you want to set up your own business and you don't have the knowledge and the
Correct.
background of having a business, but you really have the skills.
Yep.
You might as well
Just
ask
hire an
someone.
expert.
Yeah,
Just
you might
hire.
just as well consider hiring an accountant for you to help that one out. It's not a bad thing to ask help from everyone. Yeah.
So an accountant cannot be only one off, or cannot be someone like if I own a business, can I be you're the accountant and I work with you every month?
So it's not just a
So
once
it's-
off engagement.
Oh, that's
yes,
right.
yes,
Yeah,
yes,
that's
yes.
true.
That's definitely a good thing if you have a relationship with your accountant. Not necessarily a relationship that you are thinking. Okay. It's actually
You wanna say hello to your
professional
girlfriend?
relationship.
Like a
It's actually a
relationship.
professional relationship between the accountants and the clients that
Yeah.
we need to have a proper planning, how to
Right.
engage with all the things that you have to dwell with.
Yeah.
So especially the technicalities, not of course not the legalities, because we have the lawyers for that one, but definitely accountant can help you guide with all the technicalities, especially for the taxations, the financials, and everything you need to know is setting up your business or how to start up your business.
That's good.
So they can actually advise you with that one.
And you actually discuss with them, you discuss with your clients about proper structuring, whether they're better off as a sole trader or as a company structure, right?
Yes, there are definitely benefits of being a sole trader or a company or a partnership. There are pros and cons on that one that we can actually take a look one by one later on, if what type of business you would want to explore with. So if you're starting, what's the best way to start a business? Maybe it's a sole trader or a partners. So you can actually explore that one out.
And they can book with you for
Yeah.
business consultations.